Final call, ladies and gentlemen, for our participants who are still in the lobby. Please do feel free to bring your coffee inside with you. We are now ready to begin our last panel discussion of the day. Thank you very much. If you could take your seats, thank you. Okay, now I think that we are ready to begin our last panel discussion of our conference. And we are more than privileged, I believe, to be able to pick the brains of our governors who are here with us. The title is High-Level Concluding Panel, the Governor Talk. We will have 4 panelists and our moderator. I will introduce them to you, however, they are already up on stage. We are joined by Governor Chang of the Bank of Korea, former Governor Mr. Veerathai SANTIPRABHOB of the Bank of Thailand, Governor Ms. Serey CHEA of the National Bank of Cambodia, Chief Executive Mr. Eddie Yue of the Hong Kong Monetary Authority, and our moderator, none other than Mr. Tobias Adrian, the Director of Monetary and Capital Markets Department of the IMF. And without sparing any other time, please take it away, Mr. Moderator.
Yeah, thanks so much. That's very kind, and I'm very honored to chair this panel with central bank governors from the region here in Asia. So let me start with an open question to each of you, and perhaps we can go down the line as you're sitting. What is the experience so far with digital money and digital assets in your economy, and what has been the role of the central bank in particular relative to other policymakers in terms of developing the digital money universe in recent years? Chang, do you want to kick it off?
Yeah, I'll be short because I already explained what we have been doing in Korea in my morning speech. So if I summarize, I think we decided to focus more on the wholesale CBDC rather than retail CBDC this time because we already have one round of study for the retail CBDC. And another reason is because of the culture, it will be very hard for us to get rid of the cash, physical cash, in the next probably 10 to 20 years. Our old generation, including my mom, always want to having a very new physical cash on the first day of every January, and they want to give that physical cash to the sons and daughters. So probably it will be very difficult to get rid of it. Given that condition, probably for us, focus on more on wholesale CBDC and its use is maybe good complements. That's one thing. Second, with the wholesale CBDC tokenized deposit, we really try to see what kind of real benefit we can get from programmability. So we want to develop many user cases. I think in the second session, Hiromi and Douglas and many already mentioned what's the possibility. So we want to actually check what kind of real benefit we can get from the programmability and from this digital one projection. And the third one is, in some sense, we are pushed by the private sector development. One is that our rapidly rising tokenized asset industry basically asks us to provide some stable payment, tokenized payment instrument to match their businesses. So in some sense, our initiative is market-driven. And second, we also, as an authority, we feel a little bit threatened by the especially stablecoin development, especially PayPal US. As I mentioned, that it's hypothetical, but still, if the Visa and MasterCard introduce similar services, and I don't know whether we can regulate it very effectively. For example, many people who has a Visa and Master account here, and then can use that services in the United States, and actually using your credit card to buy crypto assets abroad, and it's very hard to exclude that possibility. So we would like to provide an alternative instrument in digital form so that we can maintain our monetary policy sovereignty. So that was kind of what we are trying to do.
Thanks, Chang. And of course, CHEA in Cambodia, you have introduced a new payment system recently. We've all been watching with great interest. Do you want to share a little bit what you have been doing and where you're going?
Yeah, thank you, Tobias, and thank you to the organizer for inviting me. I will probably start a bit with history. Cambodia used to be, in the 12th century, 10th century, one of the most sophisticated civilization in Southeast Asia. And when we did our Money and Economy Museum and do a lot of research, we realized that at the peak of our civilization, there were no money. And in fact, it was one of the contributing factor to the decline of the civilization. The fact that a kingdom has no money, no store of value. And so we were not able to trade effectively with our neighbors. Now, so during the French, and since then, no money. And in the late 20th century, we were under the French protectorate, and Cambodia, Laos, and Vietnam had the first, probably, monetary union in the world. So 3 countries using one single currency. And it was what we call a forced marriage between the currency and the money, because what was happening with the currency, which was pegged to the French franc, has nothing to do with the local economy. Backtrack to 1975, we had the genocide regime, and this is the first time in history where money was completely abolished from the economy. People were back to the barter system. In 2019, Cambodia introduced one of the most sophisticated form of money, from having nothing and to a time when it was completely abolished, to having one of the most sophisticated form of money, and this is really a pride for many Cambodians. So in 2019, we introduced a backbone payment system called BOK-FSC, using blockchain technology. Now, for many of you who have not heard about it, Cambodia has a very fragmented financial system, and we had issue with interoperability, financial inclusion, of course, and we are a very highly dollarized economy. So we wanted to use this digital money, and I don't call it CBDC, because we wanted to promote the use of local currency. Now, banks can, in order to use this, banks can exchange their current account, current account from the normal current account on a normal conventional system to a more blockchain friendly. And I don't call it issued, as the central bank issued, it's just transforming the nature of it to something that is technology friendly. And the reason why we use blockchain was because we had different institutions who are not talking to each other, the issues of interoperability that I mentioned. And so if we want to bring everyone onto the same platform, we have to bring everyone onto the same national clearinghouse. To bring everyone onto the same clearinghouse, it implies that everyone has to implement the same level of liquidity management. Now, when we have payment service provider, when we have microfinance institutions, to whom the regulations are much less than banks, by imposing that level of stringent regulation on liquidity, it would be counterproductive for us by initially reducing the regulation in the first place, because the regulation compliance costs will pass on to the users. So we use blockchain mainly because of the finality of it. Now, of course, from a liquidity saving point of view, it's not that great, but at least the customer can send money peer-to-peer to another customer without having to rely on their financial institution to do the settlement after. Now, with BOK-FSC currently, we have reached 10 million users. We're talking about a population of 16 million. And in terms of the value transacted, it's about 75% of our GDP. I'm not telling you what is our GDP. I hope you will Google my country, Cambodia, and find out more than just this digital payment. Now, in terms of digital asset, because we have this blockchain-based national wallet that everyone can download and register and send money, it will also enable us to have citizens to hold government bonds on their wallets. And I'm saying this because we already issued our government bonds on blockchain, traded on blockchain for about a year now. The next step that we want to do is to issue it on the secondary markets. At the moment, only banks hold it. And if you can imagine the efficiencies of issuing it on the secondary markets, it means that anyone with a wallet can hold government bonds, can buy government bonds at any amount. It doesn't have to be a big amount. It can be $10, it can be $5, and at a very low transaction cost because it's programmable. You don't need custodian, you don't need brokerage fee, you don't need a settlement bank fees, etc. So this is where we are at the moment.
Great, thanks so much for sharing that experience. And as you point out, it's really coming from a place with little infrastructure to jumping all the way to the cutting edge of technology. Turning to Thailand, of course, Thailand has also been at the forefront of digitalization, and under your leadership as governor, the Bank of Thailand has been extremely innovative. So Veerathai, can you share a little bit the experiences of the past couple of years and point to the opportunities going forward?
Thank you. Thank you, Tobias. Thank you very much to the organizers for inviting me to participate in this panel. I have to say at the outset that what I say today may not reflect the views of the Bank of Thailand. My term ended about 3 years ago. So what I've talked about today also reflect on the journey, maybe about during the past 5 years that were initiated when I was the governor. When we look at the process of digitalizing money in Thailand during the past 5 years, I would like to bring you back to the pain points that we would like to address at that time. There were 3-4 main pain points that we would like to address by reforming our e-payment system and digital ecosystem of finance in Thailand. The first pain point was related to the fact that the domestic payment systems were very fragmented. And it's not just only fragmented, they were not supporting the transitions of the Thai economy to be a digital economy. After the 1997 Asian financial crisis, most banks realized that they could not rely on wholesale banking business model. So they had to move from wholesale banking business model to retail banking model. What they did is that they were competing in expanding their retail franchise, building branches, buying ATM machines. Thailand might have the highest number of ATM machines per capita in the world. And if you look at branches, one bank would open 4 or 5 branches within the vicinity of 2 square kilometers. And as we know, these are very high-cost services, high-cost financial services, where they didn't charge anything to consumers. So for high-cost services, 0 charge. So what they had to do, they had to recoup all those costs by charging on new services. And new services, meaning electronic services, digital services, were subject to very high fees. So that's the first pain point that we needed to address. Otherwise, we would not be able to transform the Thai economy to become a digital economy. Secondly, because of that distorted fee structure, it led to serious issues about inequality. The people, the small people would have to pay the fees, but the large companies, large corporations always get exempted because of the negotiating power, bargaining power with the banks. And the third issue is also related to the fact that the lending practices in Thailand had been pretty much collateral-based lending, and that resulted in financial inclusion matter for the general public. They don't have collateral. We would like to move from collateral-based lending to information-based lending. And the key information that we would like to have is a transactional payment information to serve as a basis for this information-based lending. And lastly, Thailand is a very open economy. We used to get 40 million tourists a year. SMEs also depend a lot on international trade. But the cost of cross-border transfer was very expensive. So those were the 4 key pain points that we were trying to address when I was at the Bank of Thailand. So we decided to embark on quite a few initiatives. One was Prompt Pay. It's a fast payment system. It's a fast payment system that charges zero cost for transfer. It's a system that we completely design as a central backbone, and people can transfer using mobile banking, a telephone number. Focus very much on interoperability and make it open infrastructure where non-banks can also come in and participate. The second one that we focus on is setting standards, starting from something very basic like standardized QR codes for payment. This is, one might think of this as a very basic, but I think it requires a lot of management to get everyone to agree that we would not want to have different QR codes for different payment services. It has to be one QR standard. It's not just only a matter of avoiding fragmentations of payment services. What is more important is avoiding fragmentations of payment transaction information structure. By having one QR standard, meaning that all payment transactional information will be kept using the same data architecture, and that could be supportive to the information-based lending that I mentioned earlier. And thirdly, we promote better cross-border payment connectivity. I mean, the link of Prompt Pay with Pay Now in Singapore, and also promoting our QR codes to many countries in ASEAN. It is becoming a key element to promote ASEAN payment connectivity. So those are the three key initiatives. And I think coming to the roles of the central bank, it is very key that we have to make sure that we set clear policy, clear guiding principle on all these developments, set standards is very key. And we have to make sure that we create trust in the system. Prompt Pay is now being used by all Thai. We have more accounts than the number of population in Thailand. But by creating trust, meaning that we have to perform the role of regulator effectively as opposed to being operator. And lastly, we have to make sure that we set right economic incentives to get the banks to agree to develop all these elements and not charging anything.
Yeah, I'm glad that you mentioned trust because central banking is so much about creating trust in the currency, in the payment system, in the finality of transactions, and I think your experience really explains that very well. Eddie, let me turn to Hong Kong. Hong Kong has been at the forefront of CBDC, of cross-border CBDC. I think it was the first jurisdiction to introduce a virtual banking license. And of course, in terms of regulating stable coins and other digital assets, it's also very much at the forefront. Can you give us a little bit more of the flavor of what you have been doing and what the role of the central bank has been?
Right. Well, we've been doing quite a lot on different fronts, as you said. First, on CBDCs or the use of blockchain technology. In fact, it started from about 2016 when we were quite excited by the blockchain innovation, not necessarily the unbacked crypto, Bitcoin, etc., but more the underlying technology that promises to be a possibility to solve some of the long-standing pain points. We started actually not with cross-border payment. We started with trade finance. We launched a platform called eTrade Connect because it's an obvious candidate, because trade finance involves a lot of documents, multiple parties. We launched, but the take-up rate was actually not as high as we hoped. I thought we were a little too progressive. The corporates are not ready for it. SMEs don't know what blockchain is. So we actually turned gear to think about, hey, before we further push the trade finance platform, why don't we start with a fundamental function in trade finance, which is payment. And that's where we started to look at cross-border payment. And we teamed up with Thailand to launch Project Line Route Infinon, which is the predecessor to mBridge. And we got people from China and UAE in under the auspices of BIS Innovation Hub. And Chang has already talked a lot about mBridge. But I think it's progressing very well in that we've gone past the pilot stage where we actually can see the processing time for cross-border payment being reduced from typically like 3 to 5 days into seconds. And also the cost, if you're talking about less traded currency pairs, the cost for cross-border payment is very often 5-6%. It can be cut in half. So I think it's very promising. We will go into a minimum viable product next year. From there, I'm sure that there will be a lot of fine-tuning revisions because it's the first of its kind in cross-border payment. But I'm hopeful that there will be a network effect going forward. The second area where we are piloting with CBDC is retail CBDC, what we call e-Hong Kong dollar. And George has talked about it. Over the course of today, I've heard proponents and arguments against retail CBDC. I think we're somewhere in between, if you like, sitting on the fence. What we are trying to do is to say that we want to get fully prepared so that in terms of the legal changes needed, we will prepare the law. In terms of the technical platform needed, we will prepare all the technology platforms. But on the other track, we are partnering with private sector participants, not just banks, but technology companies, for them to use our prototype to try out different use cases. For us, the practical part is important because when you think about payments, it's really about network effect. If you don't have enough adoption, and if not everybody or the merchants are using it, it will not be popular, and you will lose that important network effect. So we really want to see what use cases will fly. And we talk about a few areas that we can further ask the private sector to develop: programmability, tokenization, and atomic settlement. And we will continue with that in the next year with further pilots. So these tracks will continue into the next year. And we might actually be having one more track because we're actually quite interested, excited by the unified ledger proposed by BIS. And also I've read the BOK paper as well. And if you think about the Hong Kong context, we've already got the different elements in place. We've already got tokenized bond, wholesale CBDC, we are already coining it for cross-border payment purposes, and stable coins, it will be coming very soon. So we have all these pieces in place. It's really about putting them on one platform. So we are thinking about whether to introduce something like a wholesale CBDC sandbox next year to put everything together. And there we can share our learnings and experience with the others. So these are the three main areas in CBDC that we are focusing on. In terms of crypto assets, stablecoins is on the other spectrum of the whole blockchain spectrum. It's an area that we want to regulate. We want to make sure that there's a good balance between innovation and regulation. And here, the principle that we have agreed with the other regulators and the government is very simple, in that we want to adopt same risk, same regulation. We want to align with international standards. We want to set guardrails around the whole crypto asset platform that will provide financial stability and also investor protection. It won't be light touch. It won't be partial regulation. It will be full-fledged. And it will be transparent and clear. So if the innovators, after reading and seeing the regulations, if they don't like it, don't come to Hong Kong. But if you think you can live with the guardrails, then we welcome you to innovate here. So it's got to be very clear rules. The virtual asset trading platform regulation has been out already. And we will be introducing the stablecoin regulation very shortly. And I hope that these two pieces of legislation will provide clear guidance for the Web3 or stablecoin innovator in the world to come to Hong Kong and develop their business here.
I think that was a very, very good overview and a very broad picture of what you're doing. So let me follow up a little bit for the second round of questions about CBDC and how it relates to the existing banking system. I think throughout these 2 days, we have heard quite a bit about the role of central banks on the one hand, but also private sector innovation and, of course, adoption, right? There are many examples in the world where the public sector has innovated, but adoption by the private sector has been either small or not satisfactory. But on the other hand, of course, the private sector is innovating. So how do you see like the balance in between CBDC, stable coins, and then evolving banks in this technological and regulatory framework? So deposit tokenization has come up, something that we have heard many banks are working on. So how does it all like fit together, and what's the policy objective in all of that?
Right. If I may start, what we are actually envisaging in future, we are strong believers in tokenization, tokenizing the cash and also the assets. And I think that trend will likely accelerate in the coming years. It may not be a major part of the financial system. It takes time. But almost for sure, it will be a part of the financial system. So in Hong Kong, what we want to do is to facilitate this trend, is to make sure that we capture the opportunities. And that's why we're experimenting with different kinds of tokenization of assets. Tokenized bonds, funds are already coming in, and there are private sector participants trying to tokenize real-world assets like even properties. But with tokenization of assets, you need to tokenize cash. Where we see payments will come in, there could be different ways of settling the future tokenized assets trading. It could be stable coins, well-regulated stable coins. It could be tokenized deposits. These are private sector money. It's very much like the commercial bank money settling the traditional assets these days. Or it can be CBDC direct. Now, for example, for our tokenized bond pilot, we actually use cash tokens issued by the HKMA to settle. But if the market in future, for example, chooses to rely on commercial bank money or private sector money, let's say stable coins or deposit tokens, the role that I see for CBDC is that it could be a foundation layer to facilitate the different wallets to pay each other. They could be of different architecture. They could have different participants. But if they want to settle among these different, if you like, walled garden, silo garden, different wallets, whether it's deposit tokens or whether it's stable coins, CBDC will be used. And if you use CBDC to settle among all these different wallets, it can actually provide the credibility and stability into the system if this is the world that we're heading into. I think that's the kind of future sort of, if you like, division of labor in the financial markets.
Thanks so much for that color. Veerathai, can I also ask you about the future of CBDC? So how do you see CBDC evolving, wholesale versus retail? And what's the kind of institutional landscape around that, right? So I think Stefan Ingves yesterday shared that having the central bank actually get the public and the political buy-in around CBDC, is very first order, but can also be challenging. So what's the situation around those issues in Thailand, and how do you see this evolve?
As Eddie alluded to, we launched the Internon project about 5 years ago. Internon was a CBDC project, pilot project at the Bank of Thailand, focusing mainly on wholesale CBDC. Wholesale CBDC meaning that we would like to improve the efficiencies of the settlement systems among the banks to make it a 24/7 settlement, and also to link up with CBDCs issued by other central banks. We started with HKMA to provide cross-border, to improve the cross-border settlement, which was one of the 4 pain points that I mentioned earlier. I personally believe that wholesale CBDCs will have bright future over the next 5 to 10 years. There will be a lot more use cases, particularly for the capital markets. We also very much encourage the Stock Exchange of Thailand, the Thai bond dealing clubs, and the SECs to develop the settlement system using blockchain. So that's once we have tokenized money, there's also tokenized assets for capital market transaction. I think that's one thing that I see clear benefits down the road. The other things that we also explore was to expand it a bit beyond the banking system, but to go to the business. Okay? Businesses that have long supply chain, businesses that have cross-border transactions. If CBDCs could be used as a backbone to help improve settlement process for supply chain financing of large corporations, multinational corporations, Thai multinational corporations, when we link up with other central banks, that could also be clear use cases. When we come to retail CBDCs, to be frank, when I was the governor, we didn't see much needed use cases during that time, and we thought that our fast payment system could serve the needs of retail customers. And there were also quite a number of concerns about introducing retail CBDCs. Obviously, we heard about the possibility that retail CBDCs could have implications on these intermediaries of the banking systems. But I'm sure there are also other concerns that the central bank should focus on. The first one, going back to the issue about trust. As Stefan mentioned in his panel yesterday, central bankers know a lot about money, but we might not know much about technology. And to catch up with technology developments, when we talk about retail CBDCs, we have to ensure that there will be use cases, applications. It have to be linked up with different applications. And I'm sure all the central bankers would agree with me. Recruiting and retaining capable IT people is a big challenge for central banks, and we have to compete with the banks and also with the technology companies. And there's a clear risk if we issue retail CBDCs and something goes wrong with the system. It could have implications on the credibility of the central bank. I very much like the model that Governor Chang Yong alluded to this morning when you said you were experimenting in the next phase with the BIS to preserve the two-tier structure, the wholesale CBDC providing the wholesale backbone to the banks, but then allowing the banks to leverage on tokenized money, tokenized deposits, or regulated stablecoins to be the customer-facing with tokenized money with the public. I think that's in my view, that's the way forward to make sure that whatever infrastructures on tokenized money can be flexible enough, can serve the needs of the customers, the public, and also not jeopardizing on the credibility of the central bank if something goes wrong. I think that's the first issue. The second issue that we haven't talked much about it, I think the panel before lunch touched a bit about this issue, is the use of CBDC transactional data. As I mentioned earlier, when we developed a digital payment system, we also had in mind the shift from collateral-based lending to information-based lending, and payment transaction information is key to provide added-on financial services to promote financial inclusion. But when we talk about retail CBDC, to which extent we can use that information, to which extent the owners, the transaction owners can use that information to benefit from those information like payment information. I think we haven't touched on this issue in this conference, and also I haven't seen much discussions of it in the literature. And the last one that central bankers will have to think about when we try to promote the like of retail CBDC is the incentive structure. Obviously, there are a lot of competing payment service providers, payment service solutions out there for the retail customers. If we introduce something, we want to ensure that they will be adopted by the public at large. So they have to be competitive in terms of ease of use and also in terms of fee structure and other benefits. It was not clear to us at that time that we would be able to create the right incentive structure so that people would change their behavior. So on the wholesale CBDC, I'm in for it. I think I'll see a lot more applications on the retail CBDC. I still have a few question marks in my mind.
Yeah, and I think with the retail CBDC, this privacy issue, of course, also comes in. I think Frank Smets was talking about that from the ECB's point of view a little bit yesterday, right? Where in some countries, at least, there's a concern how much information the public sector has on individual transactions and what that is being used for. So how do you ensure AML-CFT while preserving privacy? I think it's, as you point out, is a whole other debate that we haven't had yet. So CHEA, let's go back to Cambodia. You explained the fast payment system that you built, and you mentioned CBDC just in one sentence, but then didn't elaborate. So how is your thinking evolving around CBDC relative to the fast payment system? Is there any need to have a CBDC once you have a fast payment system? And if so, how do you think about it?
So to be honest, I get a bit lost when we try to define what is CBDC and what we've introduced, BOK system, which is a digital money issued by, not issued, converted by the central bank to commercial bank, guaranteed at the commercial bank level, but not guaranteed at the retail level. So this is used both on wholesale and retail. Now, for some experts, they look at it and they say, well, this is a quasi-CBDC. And I say, well, whatever, we call it a backbone payment system. And I think, I think I would shamelessly boast about the fact that while many other countries are trying to look at the use case and study what are the implications, we are already out there using it, implementing it with 10 million people using it. So why I'm saying this is because when we are a small country and our financial system is not that sophisticated like many of these countries on the panel, it's much easier to introduce new innovation. And this is, again, this is something that many of you in the audience coming from developing countries can also do. The key to it is to define what is it that you're trying to solve and not get lost in the definition of CBDC that is mostly defined by developed economies. What you need to figure out is actually what you try to do, then select the technology for it. And I think the other key that we've learned is to work with the private sector from very early stage. We've worked with the private sector since 2016 before we launched it. And we discussed with them honestly that we want to do this. It might take away some of your market shares because you're no longer on your own trying to build your customer base. You now have to share it because what we want is to have everyone being able to talk to each other. And we also explained that this can be a success, this can be a failure, but we need you to tell us what is it that you wanted us to do. And so we may not know, the kind of business flow that would be useful for the banks and for the users, and that's when the input from the private sector was very meaningful and again, one of the main contributing factors to the success of BOK. Now, what is the future of CBDC? I don't know, the definition may change tomorrow, so don't get lost in the definition, just do what you need to do to solve whatever problem you have to solve.
That's fascinating. So can you elaborate a little bit more on the financial inclusion and financial development angle? In a number of countries, we have seen that payment systems, greatly improved financial inclusion, but also the development of financial products such as lending products. The examples that have been much discussed come from Brazil, for example, where a payment system really has a tremendously deepened financial inclusion, or some sub-Saharan African countries where there were similar experiences with payment systems generating inclusion and development. So do you have a similar experience where you can sort of like measure the degree of financial inclusion and other products such as lending products or so?
Well, we're in a country where we have 22 million mobile phone subscribers for a 16 million population. So I mean, if you look at it, even babies has a mobile phone. Before we introduced our Bakong system, there were about 40% of the population having a bank account. So we want to build on that means, on the mobile phone application. How can we reach to those 20 million mobile phone users and to have at least all of them opened a wallet account? In that sense, I think we've managed to do that. The second is by creating interoperability, and you're talking about people living in the rural area where they have to travel on a very difficult road to make a payment, to make a deposit, to make withdrawal. And if they're not using a financial institutions that is used by their supplier or the merchant, they will not be able to do that. Now, by creating this interoperability, people are now able to make payment easily from where they are. And I think the other thing that we also managed to create is also to close the divide between the urban and the rural area, because in Cambodia, we have, as I said earlier, a very fragmented financial system. We have the more affluent opening a bank account and the lesser one using wallets, e-wallets. And when people were migrating from the rural area to the city to work or to study, it was very difficult to send money to each other. It was not impossible. It can be done, but it was very expensive. And so in a way, you have this divide between the rural area, they use wallet, and the urban area using the bank account, who were connected to each other, but not with the wallet, with the payment service provider. And so by creating this interoperability, everyone can talk to each other. It's a more cohesive society in a way, but also it's allow people to transact easily, and they have no fear of, not fear, but no concerns about opening a bank account. So that's one thing about financial inclusion. The next step that we want to do, because why is it that making payment electronically will include people in the financial system? I think because the digital footprint that you're able to create in this electronic form that would allow financial institutions, Veerathai mentioned, allow banks to know their customer better, particularly those in the rural area who can't prove their pay slip or who don't have anything to SME or who don't have a bank account, but their payment behavior do give some sense of who they are, and that's allow financial institutions to make better decisions whether they want to lend to this particular group or not.
It's so fascinating, and hopefully a blueprint for other countries as well, in terms of adoption of technologies to foster financial sector development, financial inclusion, and really modernize not just the payment system, but more broadly the financial system. So I think it's really a very important country to look at. Chong, thinking about the future, how do you see the decision points going forward? What's going to trigger action? So you're exploring, but what is going to trigger the actions?
I came here to find an answer. I came here because I cannot imagine what's going to happen in the future. So currently our strategy is that we really cannot jump on the conclusion, but try to be humble, but we are open for any possibility. The main reason why we decide to focus on the wholesale at this moment is exactly the reason that Eddie and Veerathai just mentioned, that we can find more easily the user cases. So we'll start from it, but that does not necessarily mean we'll exclude other possibility. So our philosophy is to basically, let's try to find, provide the infrastructure so that private sector can compete, but at the same time, central bank also can compete with the private sector. So, and then see how the result will go on. That's first kind of idea. But second principle that we want to have at least a minimum requirement for the money. That one we want to really protect. For example, we think that whatever the future look like, programmability will be the essential. And then you can add programmability for the cash. You can add programmability for the reserves. You can put the programmability and tokenization for the past payments, tools, something like that. But which one will get more trust from the people? So, especially when the programmability become widely available, the speed of transaction amount that you can send in one click will be larger, which means that the risk can be very amplified. So you really want to have a very secure payment instrument with full trust. That's maybe CBDC, that's issued by the central bank. But how about tokenized reserves, tokenized deposits? But in order for the tokenized deposit to be fully trustable, you have to provide insurance, deposit insurance. And then for the other tokenized payment instrument, we have to probably regulate who will be the participant, right? So these are the kind of issues. So for us, why we stick to the CBDC is at least we know for sure that the CBDC issued by the central bank is trustable, programmable, instrument. And then we think that a tokenized reserve has a good potential as long as we have a strong regulation and provide deposit insurance. What others depends on the circumstances, but tricky issue is that we say that this is a central bank's design, but after the few rounds of pilot, we realized that once we focus on the programmability, the benefit comes from by combining tokenized assets with a tokenized payment instrument. But usually the regulatory body for the tokenized asset is not a central bank. It's more the financial regulator, registrator, and other agencies. So once you put in a unified ledger, the Hyun-Sung like it, it's no longer the central bank's own responsibility. Other regulatory body was really crying for different opinions. So I think these are the kind of practical issue that we have to address it. So if you ask me what will be the future look like, I don't know. But what I'm going to do it, I'll do one by one, case by case, and then try to learn the lessons.
Very, very, we will be watching. We will be watching. So, CHEA, let me go back and expand a little bit to the cross-border issue that we had discussed earlier. So, my understanding is that the National Bank of Cambodia recently announced to provide users with access to Alipay merchants. So, that will enable cross-border transactions. What was your thinking around that interlinking? How does it practically work? And how do you address those AML, CFT, and identity issues that have been discussed so often in recent hours?
So initially, when we started to work on cross-border, we started to work with the Bank of Thailand, and we launched in 2020, right in the middle of COVID. The idea initially was to promote the use of local currency, and I just mentioned earlier that Cambodia is a very heavily dollarized economy. 90% of our bank deposits are in US dollar. And the pain came when the Fed raised their interest rate and would just import everything in directly. And so this cross-border, it designed in such a way that Cambodian users, Bakong users, can go to Thailand, scan the Thai QR only if they have local currency account. And vice versa, the Thai tourists coming to Cambodia can only scan and make payment if the merchant accepts the local currency. So in a way, it forces people to open saving account in local currency, but also merchant to do so. So that have tremendously increased the use of our local currency. Second, we've realized the economic benefit of it as well, because when using US dollar means we have to deal with the banknote. And so a lot of tourists come with banknote, US dollars banknote. And at the end of the day, we have to deal with the physical banknote. We have to actually transport it back somewhere and deposit in our account overseas, because it's not money that we issue and we can't destroy it. We can't even confirm whether it's fake or not. It has to be analyzed and done by the Fed. And so we had to go through a very sort of tedious process to do that. And so when tourists come to our country, they use US dollar. Usually people are very conscious about the quality of the banknote, and that's in a way sort of stress the tourists. And now by bringing them back into the QR payment, it makes it a lot easier. The economic cost is that we don't have to deal with the banknote. Also because it's much easier now to make payment, people are paying directly from their local currency to Cambodian currency. They know exactly, so from people from Thailand know exactly how much they're paying in Thai baht without having to go through the calculation. That would also increase economic activity, buying and sales. So we've managed to do this with Thailand, Laos, and Vietnam, and next week we're going to launch it with UnionPay. Alipay, we just signed it. And if you imagine how it's going to be a game changer is the number of merchants of UnionPay in the whole of China and Alipay Plus in the whole of entire world would now be open to Cambodian users and vice versa. So that would really be something that would allow, hopefully, more economic activities, more transaction happening between the different countries. And this is on a QR payment. So the interface is the QR payment. The settlement behind it is still on the conventional settlement, meaning using the SWIFT settlement. We also try to see whether we can discuss ways where we can do cross-border settlement on a bilateral basis, on a peer-to-peer basis, because I know many countries in the region has been studying on CBDC, and if it's possible to do this peer-to-peer settlement, I think, again, it would be a tremendous help, particularly to our migrant workers, because Cambodian exports a lot of migrant workers to Thailand, to South Korea, and if you look at the cost of sending money home, it's about somewhere between 15 to 20%. And if we could reduce it further, it means that our remittance would also increase and the people would also benefit more of the hard work that they put into.
Another example of true leadership through technological innovation. And what strikes me is that Asia is really leading the way in many respects on these issues. So Veerathai, let me go back to you. And of course, one of the triggers for these policy developments has been the crypto asset universe. So many of you already mentioned that some of the technological features have been inspirations for the kind of experiments or payment systems that you actually run, which are DLT based in Cambodia. So how do you see sort of like the relationship of these public sector initiatives to the crypto asset universe? Is there, do you try to get rid of it, or do you see some sort of future?
Yeah, about 5 years ago, I think Thailand was one of the first countries to introduce a law governing the exchanges of cryptocurrencies and crypto assets. The SEC was a champion in this initiative, mainly to provide consumer protection, investor protections. And at that time, we thought of crypto assets as investment assets. And obviously, we have seen a lot of speculation in this area. The market went up and the market has declined. There have been some initial coin offerings in Thailand, but not gaining much popularity. At that time, our thinking was that as long as it's for investment purpose, okay, the SEC would regulate it. We allow exchanges to open in Thailand. I think there are 8 or 9 exchanges. There have been some of those that went bust and people were losing money. We started to become paranoid, a bit of concerns when the banks would like to enter into this space, and they were complaining that non-banks could be active in crypto assets, cryptocurrency space. So the Bank of Thailand had adopted a very conservative approach. Firstly, we said no, we didn't want the banks to get directly involved in crypto assets. If you would like to have exposure in crypto assets, it has to be clear for learning and for innovative purposes. We would not want them to have direct investment exposure in the crypto assets. And if they would like to provide services like crypto asset exchanges, crypto asset broker-dealer services, they would have to open up subsidiaries, which are totally separated from the banks, have different governance structure, different oversight, different risk management framework. And we have seen banks, 3 or 4 large banks that would like to be a bit more innovative in these digital assets, but they're in the process of learning. Fortunately, the market died down a bit with the collapse of cryptocurrencies during the pandemic. And now we continue to see interest among the banks, but the approach, again, I'm speaking my personal view, is that I think we have to be mindful because learning one step at a time, as Chang Yong mentioned.
Yeah. Very interesting. Eddie, any reactions to what you heard on the relationship between the CBDC, the crypto assets, and how the policy framework is evolving around that?
Well, I think these are actually 2 ends of the spectrum. When you think about blockchain innovation, as I said, on the one end are the unbacked crypto, which are highly speculative. We still don't like it, and that's why we're regulating it. In fact, a few years ago, contrary, sort of different from the Thai approach, Hong Kong was almost banning crypto. We basically drove people out. I don't know whether you're aware that FTX was actually founded in Hong Kong. But after receiving 2 very harsh letters from our colleagues in the Securities Commission, they migrate to other places. So it was a very, very conservative approach because we thought that the whole market was immature. And there's so much risk attached to it. But after many crypto winters and summers and then winters, we come to the view that it's not going to go away. We were trying to sort of like quietly hoping that it would just burn out, but it doesn't. It will still be part of us, and it will, especially for the younger generation. So instead of really thinking about banning it, which is in fact not practical, we changed our approach last year together with the other regulators by saying that we should regulate that, and strict regulations, as I mentioned. So for that, we are actually taking a very stringent approach, and it involves a lot of cross-sectorial coordination because, as mentioned this morning, stablecoins can be means of payments, it can be money market funds, depending on the form. So we have to coordinate very closely with the Securities Commission so that we won't let the operators go through the cracks. And global coordination is important as well. And that's why we're very supportive of the FSB recommendation lately about pushing the regulatory parameters agreed by FSB to all jurisdictions, not just FSB member, but also non-FSB member. So with this collaboration, both cross-sectorial and cross-border, we're hoping that we can provide the regulatory parameter for the crypto asset world. But CBDC is very different. It's really just a digital form of central bank money. And we look at it as I mentioned, a foundation layer to support commercial bank or private sector wallets, which in turn will support the future tokenized world. So on that part, we're actually more on the enabler, facilitator, or even developer type of role, instead of exactly a regulator. Of course, stable coins we have to regulate. But once they're regulated, we actually thought that they could be part of the future landscape in payment. So these are 2 roles which are quite separate.
Let me open the floor to questions. Are there any comments or questions or other reactions for our governors? Yes.
Thank you for the excellent discussion. My question is to Governor CHEA. There's always a lot of discussion when people talk about CBDC or whatever they are. but people always talk about financial intermediation and the impact on the banking system. So I was just wondering what your experience has been in terms of the impact on financial institutions. Have they actually benefited? Has there been any particular impact in terms of how their balance sheets have changed or their market share of payments? So yeah, a little bit about that side of the experience.
So the first considerations when we were designing this was to look at, well, there were discussion as to what if we introduce something like this that is issued by the central bank and people no longer safe with financial institution, and you take away the intermediary roles, and then, you know, the whole sort of, you know, monetary policy model just collapse and you have to rethink about it. So we thought, okay, just to, and again, this is all policy design. So we said, well, we're going to design it in such a way that when banks go bankrupt, right, the money in the wallet, although it's on blockchain, so technically, when it's in your wallet, it's your own ledger, nobody can touch it. So it's like holding your cash, no one can take. But we've designed it in a way that if the bank who issued or who distribute this to the customer go bankrupt, we will be able to block that. So it means that we can put a hold on this, and it's the same as having a bank account. So the wallet is not a token base, but it's an account base. Again, I mean, we humans are the one controlling technology, and we shouldn't let technology control us. So you can design it whichever way you want, as long as you know what you want to, what parameters you want to control.
Any other reaction or question? All right. With that, thank you very much to the governors. Thank you, Chang Yong, for hosting us here. I think this has been a tremendous conference, and you know, very, very thankful for having us here.
Thank you. And everyone has to come back until you give me an answer, okay?
Thank you. Thank you very much to all.